Okay, we are broadcasting. Some of these rotten students probably could have been here. Kevin was here for summer cost. Giorgio said he hadn't practiced. Tanda has to work. Haven't seen Tracy Fowler once. She probably has to work. So here we are, just three of them. But I had a student come by this morning, came principal. The first test, he had a 69. Second test, a 58. He wants to know what he has to make on the exam to get an A. He's got a D and an F on test. He wants to know how much he has to make. I told him 200 points on the exam out of 100. And he could get an A. But some students start worrying about grades. In principles, I started to tell him about this guy from Africa. He's one of my principal students, and his mother, 57, died last week of lung cancer. And I guess he went to funeral home, got to make arrangements to take her back to Africa. And she and he were coming to Belgians here. So that's a kid that came to class, and his mother's in the funeral home. So I think you got it bad, it could be worse. In that case, it was worse. Okay, we need to zero in one more week on taxes. Now, I do encourage all of you here and listen. Can you come to the award ceremony at 3 o'clock next Tuesday? Okay. Maybe I can you. But it's enough. Robert, 5%. The what? 5%. Okay, can you arrange your schedule or anything? So I'd like to get all the VITA and people together for a picture too. But you'll get a certificate from the School of Business because you did VITA. You'll get this certificate letter from IRS because you did VITA. And those things are pretty much an honor. They used to give us a dinner up at Candle Rack. IRS used to give a dinner at Candle Rack. That's when they gave you certificates. But I guess their budget got bad and they can't do a dinner anymore for the VITA volunteers. But anyway, we have none rejected yet, so everything's looking good. Sarah had that one rejected. I told you all about. I put her in that she found $10, so we accepted. All right. There's an award thing going on right now down at Student Center. I guess they're recognizing years of service. It's either 5, 10, 15, 20. I wasn't in any of those categories. Dr. Bourne is getting a 40-year service award today. This year makes him 40 years up here. I was here in 79, and he was just starting. I stayed here in 79. However, it's been a lot of years. It's been about 40 for me. It was his first year. It's my first year. I resigned and went back to Southwest. I never burned any bridges. All right. When I came up here, I was welcome back to Southwest. I was at Southwest, I was welcome back up here. I left the public schools as assistant principal, and I was called and asked to come back to be a principal on the small high school. So I never burned any bridges. I was always wanting back. So hopefully the jobs you had in your career in the future, that you will have that report to get a good enough job that they take you back. Okay. Some people leave under bad circumstances or whatever. Okay, now in the next week, I'm going to have to push you. So please listen up. Your exam is going to be on chapter 2, 3, and 11. I think 11 is sub-AS. All right. And one thing about 11, I researched it a little bit in history, talked to Mr. Arnold about chapter 11 on personal liability company. personal liability company, you still have to incorporate it as a sub-S or corporation or do a proprietorship. And with the original research, my son's going to be buying out a chiropractic business. I'm going to suggest a sub-S. Now, if my son were a proprietor and he made $120,000, he'd have to pay taxes at $120,000, right? But if he's sub-S, he can pay himself a salary of 60 and dividends of 60. What does that save him if he gets dividends into the salary? It saves him Social Security tax. It saves the business the matching Social Security. You will only pay dividends, only taxed at 15%, whereas other income may be taxed at 25%. So that's why I'm suggesting the sub-S to give him that limited liability. But however, accountants and doctors, and dentists and lawyers, they don't have full protection like any other business, either a corporation or sub-S. All right, so we got those 3 chapters that we're going to have a test on. All right, we've got to work on one with the corporation and sub-S. We worked on a corporation, never did finish it. So we're going to go back to chapter 3 today and look at some of those solutions and look at some of those that I had assigned for class. So if I can find those. Now, we may have looked at a few of these problems, we may not have. But now, Savannah, I have not seen her in a month of Tuesdays and Thursdays. I've not even heard from Savannah. Excuse me. We looked at some ins and outs on chapter 2. The important information for test purposes will be on chapter 3 and chapter 11. That will be your 2 main chapters. You should look at their comprehensive example in year 1 and year 2. All right, now I know we looked at some chapter 2. Olivia, have we looked at any problems in chapter 3 at all? I know I always tell you do the even problems on chapter 3 and 11. We don't have anything marked, we probably haven't looked at. Okay, that's why we must look at a few problems in chapter 3 to clear up maybe some points in the chapter. All right. Let's start with chapter 3, problem 3-34, page 3-56. 3-56, all right, organizational starter expenditures. Delta Corporation incorporated in January and July and elects to have an initial tax year end on October 31. They incurred the following expenses between January and October before they started, related to organizing the business. All right. Now, you had travel to investigate, legal expense, commissions to stockbrokers, temporary director's fee, expense of transferring building to Delta, accounting fees, training expenses, rent expenses, and so on. The questions are, what alternative treatments are available for Delta expenditure? And what amount of organizational expenditures can Delta deduct on its first tax year? What amount of startup costs can Delta? Okay. What is considered startup and what is considered All right, number 34, I'm trying to find it here. They can elect to deduct $5,000 of organizational costs. This thing won't write today either. They can elect $5,000 under Section 248 and amortize the remainder over 180 months. Well, if you divide 180 months by 12, you get 15 years. Somewhere back in accounting, we saw 5 years. Okay, so these elections are deemed automatic. Okay, you had travel expenses startup. Legal is organizational. Commission to stockbrokers, that's just a reduction of the capital you take in. Cash from the sale of stock. All right, director's fees, organizational. Expenses of transferring building to Delta, capitalized as part of the building cost. You depreciate it. You add that on to, you had a deed search, you had a termite inspector, and that's added on to the price of the building and depreciated. Accounting fees, organizational, training expenses, startup, rent expense, startup. All right. And of course, your second month, just ordinary expense. So you got to treat some of those as startup, some as organizational. Now, organizational expenses add up to $2,500, and $2,500 is $5,000, and $1,500 is $6,500. You can take $5,000 of that, take $5,000 now. Now, B part, organizational expenses totaling $6,500, and Delta can deduct $5,033. That's all the startup expenses. Divide that by 15 years and then multiply it by 4 months over 12. All right, I want you to look at 36. That's that charitable contribution deduction. So this chapter has the startup expenses and the organizational expenses. All right, on page 57, this corporation stock purchased 2 years ago for $2,500. The stock had a $19,000 fair market value. Now, what are these items? If you look at these items, this corporation donates the following property to Johnson Elementary School. We're going to give them stock in XYZ. We're going to give them stock in ABC. We're going to give them stock in POR, PQR, whatever. The school will sell the stock and use the proceeds to renovate a classroom to be used as a computer laboratory. The taxable income before charitable donation, carrybacks and forwards and all that, or NOL or capital loss, is $400,000. What is Blue's charitable deduction, carryback, or carryover, if any? And what would have been a better tax plan concerning WYZ stock? All right. Now you look at the basis of XYZ stock at 25, fair market value of 19. You get to take 19. ABC stock, capital gain property, 2,000 or 16. You get to take the 16 fair market value. And then, of course, the POR, whatever it is, stock PQR, short term, you get to take the 12. All right. Look at these first two. All right, this third one is easy to see. You get to take the 12. It's short term, you get to take your basis. And what is the difference between these two stocks? One, you get to take the fair market value, and one, well, you can take fair market value in both. No, I answered my own question. you get to take the fair market value of these two stocks. 47,000. The charitable contributions limit to 10%. What is 10% of 400,000? All right, you'd take 40,000 and carry the rest back. Carry over. All right, that's easy to see. Now, they'd been better off selling the XYZ stock first, recognizing the $6,000 loss, and then donate the sale proceeds to the school. That way, if you sold it for 19, you'd get the $6,000 loss, and then you're going to take the 19 as a cash. You'd get to take the whole 25. So that's the point on charitable donation of capital gain property. $38. All right. Omega Corporation reports the following results for the year. They got gross profit on sales, dividends from less than 20% owned corporation, operating expenses, and charitable donation, cash. I want you all to take a minute with A part, 38A. Take a minute and see if you can answer A and B on number 38. Okay, on number 38, Rob, did you come up with how much of that 11,000 they can deduct? Remember, it's 10%. We know that they've got 120,000 minus 100, that leaves 20. Now, how much of the 40,000 dividends are you going to be taxed on? I believe that'd be 30%. 30% of 40,000 would be 12. Add the 12 onto the other gross profit of 20. It looks like 32. If I'm right, you multiply 32,000 by 10%, that'd be 3,200. But I may be off here somewhere. All right, here's what they're showing us. They're showing us gross profit, 120. Dividends, the whole 40,000. Subtract 100, leaves 60. Now, you're taking a 10% deduction for charitable donation before the dividend deduction. So this is where I missed it. All right. You're going to take 10% of the 60,000 and you'll carry over the other 5. But now you'd still go down and take out the 70% of dividends. All right, now we start off with 60 here, and you take out the triple donation 6, Take out 70% of that 40,000, which I was doing first. That's 28. So now you got taxable income of 26,000. Now you got a U.S. production activity of 9% of the 20,000. Now where did 20,000 come from? That's 1,800, and that leaves you taxable income of 24,200. But now where did the 20,000 come from? All right, that would be the 120, forget about the dividends, minus the 100. The 120, and my pen's not working. The 120 minus the 100 gives you 20,000. Dividends is not productivity income, so you can't take 9% of the dividends, okay? All right, these problems are looking at startup expenses, organizational expenses, and charitable donations. All right, we're going to look at number 39. Now, I hope you have 1120 with you. So, gross profit on sales, dividend from less than 20% on 100,000. What is their taxable income for the current year, assuming qualified production activity is 2,000? So everybody take a minute and work a part. Take a minute and work a part of 39. Anybody got an answer? Well, gross profit before dividends is how much? Robert, what is the gross profit? Gross profit, 120,000. What is your net income after operating expenses? Ignore dividends and charitable donations right now. No, it'd be 220 minus 218 would leave how much? 2,000. All right, now the dividends are going to be taxed on 30%. How much is that? What's 30% of 100,000? All right, now you're going to get a 9% on that 2,000 income. 220 minus 218, 2,000 minus 9%. How much is that? 180? All All right, now let's look at the problem. I'm looking at the wrong problem. All right, 320 minus 218 leaves 102 minus 7. That leaves the 32,000. And we took out 180 out of the 32, left 31,820. 31,820. But now, what's the deal on B part? How would your answer to part A change if our operating expenses are 234? Well, you got a loss, not counting those dividends. Because 220 minus 234 is a $14,000 loss. You'll get zero production activities. Anyway, you put in the dividends, take out the 234, leaves you 86, zero. But look at this number here. How come we're only taking out 60,200? Now somebody multiply 86,000 by, multiply that by 60%. I mean 70%. Multiply 86,000 times decimal 7. All right, now, do you see where the 60,200 comes from? All right, so your dividend received deduction is either 70% of the dividends, which is 70,000, or 70% of the net income, whichever is lower. And net income was lower than the 100, so we took the 70% of it. And we had no net income from production, so there was no 9% deduction. Okay, I wanted to make that point on the dividend received deduction. Okay, moving on. Let's look at number 42, an NOL. Ace Corporation reports gross income of 200,000, include 150,000 profit from its operations and 50,000 in dividends from less than 20% on, and 220,000 of operating expenses. Ace's 2015 taxable income, all ordinary income was 75,000, on which it paid taxes of 13. What is their NOL? Now, let's don't take a lot of time with this one. I just want to show you number 42. Okay, sorting out these numbers, we had $55,000 calculated this way. We had gross income 150, dividends of 50, made 200. Well, we had the expenses of 220. So that means 20,000 minus dividends received deduction. All right. Out of this 50,000, we're still getting a deduction of 35. That would be what percent? You're getting 70% deduction, which is 35,000. That's going to give you an NOL for 2018 of 55,000. And you can get a refund. Okay, now we're going to get over to number 46. In this chapter, we have capital gains and losses. Let's review what you do with capital gains and losses. What are Western's taxable income and income tax liability for the current year, assuming qualified production activities, are 89,000. All right, you have gross profit from sales 150. All right, net your long term there. What is your net long term gain or loss? Kayla, look at the long term. What is your net? How much? 7. All right. All right. What is your net short term gain or loss? Olivia? Number 46. What is your net short term gain or loss? Well, you got a 10,000 gain, you got a $2,000 loss. What's your net? How much? It'll be 8,000. All right. Now we've got a short-term loss of 7. A long-term loss of 7 and a short-term gain of 8. And we've got operating expenses 61. What is their taxable income and tax liability for the current year? Now, 89,000. Somebody multiply that by 9%. What's 9% of that? All right, 8,000 something, Robert. Now, please take note of this. Net capital gain is 1,000. Kayla, you got what, 7,000? And Olivia got 8,000. One was a gain, one was a loss. So we just put in the 1,000 gain, that's 151. Net operating expenses given to you, that left you 90. 9% of 89,000. It was easy to get taxable income in this problem of 81,990. It was easy to get that. Most corporations, once you work with them, they do get easy. All right, now how many of you have 1120 form with you? You have 1120, Caleb? Olivia, you got 1120 with you? Oh, you have a plan? Okay, that one. All right, what I'm going to do is try to bring one up from irs.gov. Now, this is important for a problem we're going to be looking at. I just hope I can do that and keep my recording going. Now, if you have an old one with you, here's the part we're stuck with right now. And I wish I could write in here. I don't think this pen's going to write today. All right, now we're going over to a problem. Okay, we're going over to number 58. All right, now let's start analyzing that problem. I don't know if this is going to work. I need you to have the form because I need to go back to the solution. Okay, converting book income to taxable income. The following income and expenses appears on the books on the accounting records. Okay, you've got net sales, you've got dividends. Now, if you read down there, dividends come from a 30% owned domestic corporation. If you're 30% owned, what is the dividend received deduction? If you own 30%, all right, let me go back to all right, look at it. Look at your screen. And if you even have 1120 filled in, it's okay to look at a hard copy. Now, what is your dividend deduction if you own over 30% of the company? We've been doing under 20 and getting 70%. But if it's over 20, you get how much of a dividend received deduction? How much? If it's over 20, how much deduction do you get? Okay, 80. 80%. Okay, keep that in mind. Okay, then you have interest. Number 2 says that's interest expense. And interest on corporate bonds, and then 15,000. Municipal bonds, 3,000. Municipal bonds, we know that's not taxable. Then we got gain on sale of stock, and they explain that. They used specific write-off for bad debts. Stock was long-term. You go down to bad debts and payroll taxes and interest expense and charitable donations and depreciation and other expenses and federal income tax expenses, and then net income, and then total. Now, Kayla, which one of those catches your eye? Which one catches your eye that has to do with the books, but it won't be a taxable item? Or you got dividends of 10,000 on your books, right? But only 2,000 are taxable. You get 80% deduction, right? On your books, you've got 18,000 of interest. But is that income or expense? Interest revenue consists. Now, is that whole $18,000 of interest taxable, or is some of it excluded? How much? All right, let's see. 3,000 excluded on municipal bonds. Gain on the sale of stock, we know that's taxable. Now, key person life insurance proceeds. The corporation got $100,000 because one of their officers died and they had life insurance on it. Question, is that $100,000 taxable to the corporation? Okay, move on down. Cost of goods sold, you know what to do with that. Salaries and wages, and bad debts. And now there's interest expense, number 5. 11,000 interest incurred on funds borrowed for working capital and 5,000 interest on funds borrowed to purchase municipal bond. That's the 5 probably that Kayla saw.
Yeah.
Now you can't deduct that 5 then, can you? So out of that interest expense, 5,000 is a problem. Charitable donations, 50,000. We don't know how much of that we can take till we find net income. Depreciation, 70,000. Now look down at number 7. They calculate depreciation per books using the straight line method. For income tax purposes, depreciation amounted to 95. So you've got a $25,000 tax deduction that you did not take on your books. Other expenses, number 8, include premium of $5,000 on key person life insurance. Now, can you take that insurance premium? Number 8, I lost myself here. Can you take that $5,000 on expenses? Then you've got federal income taxes, other expenses, and you got net income. Now you got book net income. All right, take that book net income of $454,080. Take that. That's book income. That's all income and all expenses. Take that and subtract out anything that IRS is not going to tax you on, or add in anything that IRS may tax you on. So take the $454,080, take your dividend received deduction out of that. You may have to add interest back. No, subtract the interest out of his interest receivable on municipal bonds. Subtract out 25 more thousand depreciation and see what you can come up with. Take just a minute and do a few calculations. You had 300,000 production of 9%. You had a 90,000 NOL carry over. All right, I want you to look at this real well. All right. Whoa. it's still a little work over this one here. All right, you don't want to try to read this one. Yeah, now mine's showing up good. Okay, now I don't know how to blow this up on this thing. I don't have those pluses and minuses, but I want you all to look at book income and taxable income. Now this is important because I want you to have that on an 1120 tax form. I will not give you the exam until you have this Part 1A tax form. I want you to have it on no later than next Thursday. Give it to me Tuesday, give it to me Thursday. You've got to put it on 1120 tax form. But I'm giving you the answers. You have got the answers right here. Okay? You're going to put all this on the front of the 1120 to get net income. All right, when you get over to your taxable income, you're going to take out this adjustment, and you're going to have to do those M1s and 2s. Now, we would have done this today in class if we had some clean 1120s. We would have tried to get it done in class. But please bring it Tuesday. Okay? Your taxable income is still $3,230,000. Dividends, no, you're going to take out a deduction down here somewhere. Let's see. 10,000, but you know you're going to take out. Now here, interest, you know you're only taxed on 15, not the municipal interest. Life insurance, look at that. Is it taxable? Is the $100,000 life insurance taxable, Caleb? It's not taxable at all, is it? Okay. Big adjustment. All right. Cost of goods sold, salaries and wages, bad debts as given, payroll taxes as given. How about this interest here? What was that 1,000 for that you're not taxed? It's not a deductible expense. Was that to buy the municipal bonds?
Interest on debt and carry tax exempt obligations, not deductible.
All right, municipal, okay. So you see that one. Okay, contributions. You're going to get to take out 45,800. You will carry over 42. Depreciation. You get to add 25, make it 95. Other expenses. You take out the 5,000 you pay for life insurance premiums. Not taxed on the proceeds. You don't get to deduct the premiums. Okay? Federal income tax, same thing they paid. U.S. production activities, that's 9%. That you'll calculate to 27. I can't read this up here. What is this?
FTI for special deductions.
Yeah, well, what is that 21,120?
If you scroll down to June,
So here's your federal income tax. All right, let's go down and see what that was. I don't see any calculation.
I think it's under G or H. Sorry, H.
G, we know where that come from. H, I must have another page.
Yeah, it's taxable income before the U.S. Productions Act deduction. I don't know.
We gotta find it.
Then it's in terms of U.S. production activities, deduction.
So here was your income tax before charitable donation, taxable income, and you take 10%. The dividend received deduction we know is 8,000. NOL deduction we know was 90,000. So 548 minus the 90, minus the 8, minus the 45.8. They didn't show us how we got that, but we'll look. Probably right here. Taxable income before charitable deduction, 458 times 10% is 45.8. So now, the U.S. production activity deduction is 9%, whatever the production activity was, and they told you that was 300,000. So now we got the 4042, we got the 27 calculation, taxable income 377, dividend received deduction 8, NOL deduction 90, so we got 475. Now, I want you to take that, do what you can on the front of the 1120. There's no balance sheet, so you don't have to worry about balance sheets. And do what you can on this M part. I forget which M it is. You've got all the answers up there. And if you didn't jot them down, you know they are on Moodle. So you'll be able to get those from somewhere. Okay, so that's a good problem to put on a tax return for next week. Now, on 59 and 60, see if you have a mark in your book, Olivia, for 59 and 60. No mark? All right, no mark on 59 and 60? Those are the two I asked you to do last week. All right? So we got to look at them. Again, I want you all to please bring a blank 1120 and a blank 1120 to class Tuesday. We are running out of time. I need to show you things on those forms. All right. Number 59 is reconciling book income with taxable income. The best I can do now is show you the solution because we don't have a form to put it on. All right. Number 59. Almost like the one we looked at. Net income per books. Federal income tax per books. Excess capital losses. All right. Expenses recorded on the books not deducted on this return. A charitable donation. Interest on loan to purchase taxes and bonds. Insurance premiums. Income on books not on this return. Tax exempt interest not on the return. Deductions in this return not on the books. Extra depreciation. U.S. production activities. Then when you get down to 10B, net income before income taxes. Non-deductible interest, non-deductible insurance premium, tax-exempt interest income, U.S. production activities. Now, B part of that problem, I believe, was totally different. You can't do this on the tax form. Now, this you could have put on the tax form pretty easy. You could have put that on the tax form. All right, now let's look at number 60. All right. Number 60 is a retained earnings statement. Can you see that? That is one of the schedules on your 1120. Can't see these at all. All right. Retained earnings statement. Balance at the beginning here, 246. Net income, 250. And then you subtract out your dividends, cash. And subtract out a contingency reserve. Now the intermediate or advanced or somewhere, you've got retained earnings appropriated and non-appropriated. And this other decrease contingency reserve, that'd be appropriated reserve for planned expansion, retire bond, or do something. So this problem was quite easy. But that's the two I want you to put on 1120, those two schedules. If you get time, you still should put them on 1120. All right, I want you to try to put problem 64 on a tax return. Be working on it also for Tuesday. So you got one to put on tax return that we went over. This one you're totally out in the cold on. See if it don't ask for 1120, but try putting it on a 1120. Okay. So we got a lot to do next week. Hope some of these folks who are not here decide to show up. And y'all have a good weekend, and I'll see you on Tuesday.